Hello, everyone, and welcome to our October YPC Media webinar series. I know a few of you are just coming in from the waiting room, but as you guys all are joining here, again, welcome to our October webinar. My name is Katie Fitzgerald. I am the Director of Operations at YPC Media. Today, we have a very special guest, Louisa Else, and she is a CPA, bookkeeper, consultant, you name it, many hats. But thank you so much for joining us today.
I'm excited. I'm excited to be here.
Yeah, so one of our goals for these webinars every month is to really help you business owners out there strategize with not only your marketing, but we want to add tremendous value to your business and be a great arm for you as a resource. So we're looking to bring on more partners just like Louisa here and give you guys some really important information. So today's agenda, we're going to look at some possible financial pieces to get you ready for 2026. So we're going to look at just some housekeeping, do some review, what you should be looking at for planning. And there's going to be a lot of open Q&A. But before we even dive in, will you give us a quick bio or give us your background?
Sure, I will try to keep it brief. I am known to talk a lot and talk fast. So apologies if I need to slow down, throw it in the chat, please, guys. I need the reminder sometimes. So my name is Louisa Else. I am a CPA. I currently run my own solo practice of doing outsourced bookkeeping, controller, and consulting work. In my past, I have done a whole host of different tax work. I have done a lot of outsourced controlling. I have done industry work, working inside a publicly traded company. So I have seen almost everything. I will not say everything. But what I haven't seen, I have learned the right way to Google, is what I tell people a lot. So I really enjoy being able to work with business owners. That is the line that has gone through my whole career and what I've always come back to. So I'm really excited to be able to bring a little of that today. On the personal side, I am a super passionate working mom. Katie and I have connected on that for sure. I talk about my kids all the time. They are 9 and 11 right now, keep us going everywhere crazy. And I'm super proud of being a remote working mom. I'm not a stay-at-home mom. I am a work-at-home mom. They are two very different things. And the status of my laundry pile will support that. So that's a little bit
I
about
love that.
me and what I'm doing these days.
I love that. And, we're going to dive into some things. Again, like she mentioned, the chat is open. We'll try to get to some Q&A throughout as we go through our slides that we've prepared today. And then there will be some time at the end, hopefully, as well. And if you stay till the end, we do have our link to our Facebook group that we can get additional questions answered and get you connected if you are looking for more information. So let's start diving right into step one here of what we need to be getting on our task list before the end of the year.
Yeah, so Q4 is a really good time to think about next year. We don't want to yet, but it's really important to help us kind of get ahead of the game. Q4 in most businesses slows down. Obviously, everybody's a little bit seasonal in different ways, but it tends to, winter comes around depending what you're doing. So if that's not your business, I apologize. But generally speaking, people kind of take a breath in Q4, which makes it the perfect opportunity to kind of try to get ahead for next year. And the first thing you want to do before you think about anything big picture and anything strategic is do the housekeeping and make sure you're organized. We all, at least I have done this, and I know better because I do this, I tell other people this for a living, but we all make really good promises to ourselves in January that says, I'm not going to get behind this year. I'm going to make sure my books are done every 2 weeks. I'm going to make sure all of my invoices are sent. Any billable hours, I'm going to send them immediately. 3 days after the month is done, I'll have all my invoices done. And then life happens and we all wear multiple hats, especially if you don't have a partner bookkeeper or CPA doing your books every month. It is not your priority. Running your business is your priority. And so our best laid January plans generally fall a little bit apart, or if not a lot of bit apart. So this is a great opportunity to at least not wait until next January to promise it to yourself again. But to catch up, get everything cleaned up. So the first thing is just catch up on whatever's fallen behind, whether that's your billable hours, whether that's uploading receipts, sending invoices, anything like that. Catch up on the stuff that you've been putting off. The second thing is to take a look at what vendors you have worked with this year, if any of them are new this year, and see if you're going to need to send them a 1099 in January. Those are due by January 31st, so you don't have a lot of time when the new year starts to really get ahead of things. 1099s themselves are not hard to do. The data gathering around them is hard because you are dependent on other people. And so if you can get that piece of the puzzle on track right now, that'll help you a ton. The rules for 1099s for 2025 are $600 still. So anybody you paid, any LLC or sole prop, you paid $600 or more for services in 2025, you will have to give them a 1099 in January. In 2026, that actually goes up to $2,000 unless that changes. We know that Washington likes to pass things at the last second, but currently we're going to get a little bit of a break in 26 and forward where they've upped that minimum to 2,000. But for 2025, it is still 600. The W-9 is a PDF form on the IRS website. You can Google fillable W-9 and it will pop you the PDF right there. So all you need to do is give your vendor a call or shoot them an email and say, hey, can you please provide me your W-9 ahead of next year? It looks like we've gone over $600. Or hey, it looks like we're getting close. Can I get it on file just to be safe? They'll either say, hey, yep, absolutely. They might even have one filled out. A lot of vendors have one that they don't even need the blank one from you, but it's nice to have in case they don't. Or they might say, hey, we're a corp, you don't need it. That's fine. You just make a note. So corporations, you don't have to give a 1099 to. That includes S corporations, but any LLCs and any individuals you work with do. Technically that if you have a rental property, that goes for like contractors. So if you have somebody come mow the lawn once a month, all summer long, or every 2 weeks, and you probably pay them for the whole summer more than $600, you need to give that individual a 1099. Or if you have landscaping, come to an office building, anything like that. So it's more things than you think it is, and it's good to keep an eye on. And finally, and really I should have put this one probably first, because in order to know who you've paid $600 or more, you need your books up to date. So the last thing is just make sure your books are caught up. I have worked with so many business owners who bring me their books in February and they aren't done yet for the whole prior year. And you can't make decisions. You can't do any of the next things we're going to talk about. And you can't have a good feeling of where your business is at if your books aren't caught up. If you don't have your books caught up until February and you have to file 1099s by January 31st, you're making an educated guess of what you've paid that person based on, looking back at your check roll or something like that. Whereas if your books are caught up to date, you can do a really quick vendor report and have all of them right there in front of your face. So if you're working with an accountant, if you're working with a bookkeeper, now is a great time to shoot them an email and say, hey, I just wanted to check in. Do I owe you anything? Because they're probably doing a lot in the background for you. But sometimes they have things that they need you to give them. If they don't have bank access, they need a bank statement. If they've got a list of what we usually call ask the accountant or ask the client transactions, it's probably an Excel file that they're sending you every couple of months going, hey, what is this random check you wrote out? I couldn't tell from the description. Or this is a new vendor. My Google skills failed me. What did you buy for this? So check in with them if you have one. If you don't, set aside some time to do it yourself, or this is my sales pitch, not for me, but for someone, consider working with somebody because it's their job to do it for you. And every business owner I know has more work to do than hours in a day. And there are not many of us out there who like doing it. And there are people like me who do. And so time is money in a lot of ways. So I know a lot of people say, well, it's, I just can't afford it. You may not be able to, but it might be worth looking at just to think about, hey, if I don't do that, how many more client hours could I bill? Or how many hours could I do this? Or in my case, how many more kids' activities can I drive them around to if I outsource this piece of my work? So if you're not working with somebody, take the time to get yourself caught up now so it's not in January or it's not going to your CPA, your tax guy in February. Give yourself a little bit of power to do that. Or, think about working with somebody just to take this piece off your plate.
Absolutely. Being proactive and not reactive, right? As we push through the end of the quarter.
That is my favorite phrase. I use it in so many different places, so often, especially with taxes.
Amazing. And then
So
I know
once
right
you have that, once you're like, hey, everything's caught up. I've talked to my accountant. They said, yep, you gave me all the pieces. You can look at everything through September 30th, and this is truly how your year is. This is a great snapshot. Take a step back and think about how things have gone so far. So first you make sure everything's caught up, do that housekeeping. The second thing you do is kind of do that review, do that, sit down, be honest with yourself, see how your year has gone. What is your profit? or have you lost? Are there areas that worked better than others? What spending? So whether it's conferences or education or marketing, what have you spent on that? Compare it to maybe last year. And then what were you expecting to spend on it? So look at that, not only for how you're doing, but also compare that to if you put any sort of a budget together or an expectation. How did you hold up against expectations? Because the same two businesses could have the same profit, and one could be over the moon happy because they blew it out of the water, and the other one could be disappointed. You still made money. You made the same amount of money. You could even be in the same industry, and the same dollar amount could mean wildly different things to you. It all depends on what your goals are, what you expected to do, what's your dedication, not dedication, but what you've decided to prioritize where. Once you've done that, then there comes the fun word that everybody hates to think about, but I promise you it's better to think about it now, which is, what does that mean for your taxes, and what does that mean for the next 3 months? Your year isn't done. If you are behind track, if you do see things that need to be, adjusted or pivoted for, take a look, and what does that mean for the rest of your year? And what does that mean for your taxes? And if you haven't done it yet, reach out to your CPA. Ask for a tax planning call in the fourth quarter so you can see what you need to do and get ahead. They're going to have all the pieces of your puzzle in place. And if you can go to them and say, hey, here's my books, they're solid through Q4 or through Q3. Can we take that and kind of see what we expect? They probably gave you some estimates in April. Those were based on last year. And those were based on penalty protection. So just because those are what they expected you to owe based on how 2024 went, does not mean that's going to be even close to what 2025 looks like, especially if you had a growth year or a down year. The last thing I want to see business owners do is maybe have a down year. Be paying in those quarterly estimates because they're good clients. They listen to their CPA and then get to April and go, well, here's your $10,000 refund. That's not actually a good thing. It feels good. It feels good to say, hey, here's all my money back, except you just gave it to the IRS for 6 months or 9 months and couldn't use it. So if you are having a different year, and the flip side is, hey, I paid in that $10,000, but my profit doubled from last year. Hey, it's April. I wasn't planning on this, and now I need to shell out another $10,000 plus start paying for 2026. I wasn't prepped for that at all. So having that sit down, at least in Q4, some CPAs do it quarterly, which is fantastic. If your CPA is doing that for you as well, adjusting it every quarter, that means you got to have your books ready every quarter, or they're not very helpful. But at least in Q4, because you can make some decisions yet this year with recommendations from your CPA. When you get to January, when you get past December 31st, there are very limited decisions you can make. So there are some things you can think about for Q4.
Absolutely. And then, really to relate that a little bit to your marketing, I know a lot of the individuals on today's webinar are YPC media clients, but I think that second bullet there of reviewing your performance against what you budgeted, right? Looking at using an example of marketing, how much did you budget versus what does that return? Being able to look and have your books in order is going to help you understand, where you need it to meet and how much you can allocate. Do you need to, decrease your marketing spend or increase it? And again, making those adjustments for Q4 is something that we can assist with for sure to help you bridge any gaps or, reallocate for different quarters or anything like that. So going into the adjustments you can make, let's hear about them.
Yeah, and so there are things that you can do. You don't have to wait till January. If you see something that isn't going well right now and you planned to keep something the same through the end of the year, don't do it. I talk to people all the time. Well, I already put this much money into it, so I should just see it through. That's what we call sunk cost in the economics world, and you're not going to get that back. So maybe you can see the light, and if it's working, if you're waiting for it to turn around and you actually have a good base to know that there's something going to happen in Q4, then great. But if you look at what you expected, if you look at, say, a marketing plan, anything else, and it's not doing what you expected it to do through the first 3 quarters, you can dial that back or pivot or shift focuses right now. You already spent that money for the first 3 quarters. You will not get it back. But what you can do is make sure that the money for Q4 gets reinvested and reallocated someplace else. So don't be afraid to pivot in Q4 or at any point. We're going to talk about this bigger picture with goals later. Pivot points are huge. knowing when you need to adjust, knowing when to walk away from something, it's one of the best skills you can have as a business owner, because I think as business owners, we are all conditioned to be optimistic. Um, Maybe I'm wrong, but I feel like if we weren't optimistic, we wouldn't put our livelihoods on the line to run our own company. So we are optimistic by nature, but we have to, as we're running our company, also be pragmatic and be realistic. And so having that pivot point set, understanding and recognizing it, and making the decision earlier rather than later will save you money and will be better for your company in the long run, even if it really hurts to look at the last 3 quarters right now and say, oh, but I spent all this on it. So maybe if I do another 3 quarters of the same thing, it'll work. That's usually what we call the definition of insanity. So that's one thing to think about. And Katie, that I think really relates to marketing as well as just other business choices.
Absolutely. Absolutely.
And then the second tab here, or the second point here, is one that we could do an entire webinar series on. I could talk for a long time on it. I am not going to right now. If we have time at the end, you guys can pull me back here for Q&As. And we can go into some of these in a little bit more detail. But in Q4, think about tax strategies. You have right now 2.5 months, 2 months and a week to make changes that will move the needle for 2025. Some of it is making changes, some of it is changing up timing. There are, like I said before, there are not a lot of things that you can do after December 31st to change this year's tax burden. So if you go to your CPA as tax season starts and say, hey, I had a really good year, can you save me money? They're going to tell you to contribute to a retirement account. If that doesn't work, they'll tell you to contribute to a different retirement account. That's generally the option you have through April 15th through your extension. Everything else on here you have to pull the trigger this year for it to help you for taxes this year. So the first thing I always talk about with clients when I do these Q4 meetings, which I've done a lot of them in my time, I don't see anybody on here that I've done one with, but the chances are always there. The first thing, I call it strategic spending. It is the timing of your spending. Most small business owners pay taxes on the cash basis, which means you pay tax on the income you get when the money comes in, not when you bill it. And the flip side is true. You get to have the write-off when you spend the money, not when you incur the expense. So if you've got a bill sitting at an AP, if YPC sends you their December bill and you don't pay that till next January, that's not a 2025 expense, even if it was for 2025's work. So that gives you flexibility as a business owner with a cash basis to look at timing. So if you're looking at a year where this year has been really good for you, you're expecting it to continue to be good in Q4, and you maybe weren't making the estimated payments you needed to make because this year was really good, accelerating spending into December, November and December will help you offset that. Now it's all timing. That means it's spending you're not doing next year in 2026. So the flip side might be if you've had a bit of a down year for whatever reason, maybe it was intentional to slow things down this year. Maybe just stuff didn't go your way. It's been a weird year. I think we can all agree with that. Maybe look at things that you would spend in November and December and try to push them off till January. That might require a conversation with your vendors. Hey, I'm just kind of looking at stuff. I'm trying to plan things out. Would it be all right if, I pay the November, December's bills on January 2nd? They might look at it and go, hey, yeah, because I'm having a good year and I want to defer some of my income down. So if you pay me the cash in January, I can make that a 2026 problem too. They might come and say, hey, our agreement is net 30, so you better pay me net 30. So obviously, if you're working with a vendor, that's a conversation. But there are other things too. Pre-buying on the insurance side, leads are huge, right? So I know a ton of insurance agents who go buy just a ridiculous number of leads in December. And then they use them for the next couple of months. The most important thing, and this is why I call it strategic spending, is don't do it just to do it. You do not save $1 in tax when you spend $1. You save your tax rate in tax. So you save 15, 20%, maybe 25, depending on how high your income is. You are still out the other 75 cents. It went away. It's not there anymore. So don't just spend money because you're scared to pay taxes. Spend money in a way that's going to help your business. So like I said, pre-buying leads is a great example. You're going to use them anyway. Going maybe ads, Katie, I don't know how you guys bill for that, but there's probably some opportunity to pre-spend
absolutely. Yeah,
on some marketing stuff there too.
Yeah, so anyone that is on the call, if you do have Google Ads with us, you do pay Google directly. So as far as ad spend, but you can get ahead on your management fees that you pay directly to YPC. So that's definitely an option, and you can talk to your account manager about your plan and program for that.
Yeah. So identify those things that you're going to do anyway. Computers is a great one. If you've got a team that, they're all working on machines that are 4 or 5 years old and it's coming due, get them all the MacBooks now. Don't get them twice as nice of a machine as you'd get them normally, though. So the idea is to spend the money you need to. My favorite example, and this probably is aging out as we all move to a remote workforce somewhere in some places, is please don't go buy $5,000 of printer paper that is going to sit in a pile in the corner of your office and gather dust for the next 20 years. That maybe saved you $500 in taxes, maybe, but what it didn't do was help your business. And that other $4,500 could have you could have bit the bullet, paid the taxes on it, and reinvested that $4,500 in your business later, or, paid your bills. Or for me, it's gymnastics lessons every month. Like I need $4,500 if I can have it, right? So if it's sitting in printer paper, I got a problem. That's the one I'll talk about the most because that is the one I think, one, it's a soapbox for me. There are other things to think about in Q4. Talk with your CPA, have that planning meeting. Do not just pull the trigger on these because you heard me say them today, because like we talked about with that strategic spending, it might not be the year it's going to help you the most. So retirement, thinking about what you want to put in, maxing those out. Timing of bonuses. If you pay your team bonuses, again, strategic spending. Do you want to pay them in December? Do you want to pay them in January? Keep in mind your team, impact on your team in that case, depending on how big those bonuses are. If you paid out bonuses in January this year and you pay out bonuses in December, you're going to hit your team too. Their W-2s are going to be that much higher. So think about your team if you're doing that, depending how big they are. Buying a business vehicle, there are some potential great tax write-offs for that. If the timing is right and if you're truly going to be able to use it enough for business, 51% is your key percentage there, and you do have to track your mileage. The Augusta rule is a great opportunity to rent to yourself, have your business rent to you, depending how you're structured. If you're an S Corp or a C Corp, if you're an LLC, it gets a little murkier. I wouldn't necessarily recommend you do it, but we can talk about it. A cost save study is a bigger item. You shell out a lot of money to save a lot of money, accelerate some tax savings if you purchase a building. And then state tax elections are just some optional elections for depending how your itemized deductions with paying state taxes.
Amazing. Thank you. And again, if you guys have some questions, feel free to put them in the chat. If we have a minute towards the end here, I know we only have 7 minutes left. So we're going to start.
I know, I can't help it.
I know, I was worried, but we're filling up the time just fine.
You looked at my slides and went, no. Yeah. Once you have looked at 2025 and gone, okay, here's the adjustments I want to make yet this year, it's already time to start thinking about 2026. Get that jump on the horse. So I am really a huge proponent of budgeting and making sure that it's not just one big budget. It is setting individual goals. I'm a proponent of setting a goal anytime. I don't care if it's July 15th. If you want to set a goal, map it out, make the progress, set the mini budget there. But especially going into the year, set yourself some goals. Know that they might change, but give yourself something to look back and compare to. So when I look at budgets, they are really successful. They are actually something worth putting the time into when you look both directions. You look where you are now, you look how things have gone in the past, and then you look forward and say, hey, I want to get here. You have to base them in some semblance of reality. And that's what looking backwards does. That doesn't mean you don't set stretch goals. That doesn't mean you don't want to grow. But it has to be reasonable. And that's where setting the goals go and then mapping them out. If you sold, if your revenue was $100,000 last year and you say this year you want it to be $1 million, you can put that on paper all you want. But if you don't have a really solid plan to get there, you're going to get to next Q4 and you're going to go, well, I missed. How did I miss? Well, it's because you set a pretty lofty goal and you didn't hold yourself accountable and actually show how you were going to get there. You just wanted to be there. Wanting to be there is great. But that doesn't really work in our business lives all the time. So once you have those goals, you have to map it out, not just the end goal. How does it going to get there? What's the steps we have to take? If I want to get to $1 million, I put that's probably not a reasonable goal, but what's 200 look like? Okay, what's five? Is that even over 12 months? Is it saying that in the first 6 months we're going to increase by this next 6 months we're going to duplicate, right? And so map out the stops along the way. And then the really big thing is understanding what you're going to have to spend to get there. Maybe you can get to 1 million in revenue, but will you have to spend 1.5 to get there? In which case, is that actually the right thing for you to do? Or can you get there and still be profitable? If you're 20% margin today and growing to that point, the only way you can see yourself get there is to drop to a 10 or a 5% or even a break even margin. Maybe you're fine with that because you have a plan for that and you know what it's going to flip to in year 2, year 3. Or maybe you go, hey, top line isn't the most important for me right now. I need to make sure my bottom line is steady because I pay for those stupid gymnastics lessons. You can tell what I just paid this month, right, Katie?
Yeah, right. What's top of mind here?
And then finally, once you do that, just pull it all together. You're not just going to have one goal for the year. So as you do those mini budgets, pull them into one big budget. Make sure your budget is looking at everything and that you have enough to do all of them, because maybe you've set up 5 different things. Is fantastic, but when you look at the bottom of your line, you're like, oh, I'm going to run out of cash to do all 5 of them. So really this year I have to focus on these 2 or these 3 priorities. So it's a process. It is a process that if you have a business coach or again a CPA, somebody like that, like it's a great process to be iterative and go back and forth. It's not I'm going to sit down and do this in an hour and have a really solid budget.
Absolutely. So looking ahead, so important. And then I know you went through some different adjustments too, and I know we're running out of time. Do you want to hit this quick? And then we did get one question in.
Yeah. Yeah. So the biggest thing is, you're setting those goals, your budget. And I like to keep a static budget. I like to say, this is what I expect 2025 to be like. But also that doesn't mean you're not going to change next year, 2026. I don't know what year it is. It's still 2020 in my brain. So be ready, plan to adjust. Katie's heard me talk about this at a couple of conferences we've gone together. Know what's going to happen when things don't work the way you want them to, because when do things ever work the way we want them to? If you set 5 goals and every goal and plan goes exactly how you wanted it to go, can you please call me? Tell me all of your magic secrets, and then we're going to be best friends. Because nobody does that, right? Set the pivot points and the non-negotiables. Do it now when you're setting it up. Don't do it in the moment, because we all are optimistic people. So it's way too easy if we don't set those non-negotiables to say, hey, just one more week. Hey, I think if we just put another $1,000 into this campaign. Hey, I think that's where that sunk cost comes in. If you set it now, it's a lot easier to stick to your guns later.
Right.
So I always say set those non-negotiables right now. Set up your options. When do you want to cut things off? Be ready to react. In order to be ready to react, you have to have your books up to date so you know what's happening. So when those benchmarks are coming up, if you don't have a true picture of what has happened so far this year, you're not going to be able to do anything but go by your gut. And your gut is fantastic, but it is not always going to lead you the right way. Or you're not going to have all the pieces. You'll know one thing that happened, but you'll be missing this that happened on the side. So check in. And then the last one is just be accountable. Most of us, not all, I'm solo right now, but most of us have other team. That's not just us. So when we don't stay accountable, when we don't have pivot points, it's not just us we're affecting, right? So be accountable so that our team stays accountable too. These are our goals. We didn't hit them. Now we're going to adjust.
Absolutely. So I do want to hit that one question in here. So we'll go probably just a minute over if you guys want to bear with us. The question we had come in is, does it matter what time of year you start your business? So if you don't have sales yet, should you start a business in Q4 or wait till Q1?
It does not. I think anything when you're ready to go, I would encourage you to go. The caveat to that, and I don't think this is a bad thing, but a caveat to that is you do have to file a tax return if you have activity, not if you have sales. So I see a trap fallen a lot. And I see CPAs say this. And I just actually went back for a different client. Like I looked it up because they were like, oh, my CPA said I didn't have to file yet because we don't have sales. I'm like,
Right.
If you have activity, if all you do is create an LLC and let it sit there for a couple of months, you're probably okay. But if you're spending money, you have to file a tax return for that year. So if you're going to start something up here in Q4, you're not planning to have sales in Q1, but you're spending, you're doing things like that, That's fine. That's great. Just know that you need to put it on a tax return, whether, it's a corporate return, if you do that, if it's just you, if it goes on your Schedule C. And here's the kicker, you want to. You want to get those expenses, whether to build up the rolling losses for next year, or to offset your personal income if it's on your personal return. So anytime you're ready to start it. Just know that as soon as you do start having activity, you're triggering a tax return requirement, whether that's a Schedule C on your personal return, or a separate tax return.
Amazing. Thank you. So we're out of time now, but again, please join our Facebook group. This is for all of our YPC Media insiders. You'll get some just different posts and updates throughout the year. You'll also be able to access Louisa in that if you'd like. We'll make sure she's available in there. So if you had any other follow-up questions, that's a great place to put them, or reach out to your account manager here at YPC if there's something that you'd like us to address. But thank you all. Thank you, Louisa, for joining us today and giving us some great reminders for the year end. But we still have some Q4 to go. So make sure you guys check out ypcmedia.com/webinars. We'll have our November webinar posted soon. And we will hopefully see you all next time. Thanks again.
Thanks, everybody.